Yeah.
Happy Monday.
Yeah.
What we doing?
Yeah. What's up, though?
We are back. We are live in the flesh.
We're here, man. Happy Monday. Happy Monday. Happy Monday. It is the 8th of December. Yes. It's a chilly time. Chilly time, man.
I want to visit so bad, but the Arctic blast.
Yeah, it's a little chilly. Hey, Ian, I didn't text this to you. I didn't call you. All right. I wanted to publicly say this so everybody can hear it. Congratulations to your Indiana Hoosiers. Number one team in the country, probably will have a Heisman Trophy winner.
Let's go.
Yeah.
Coach said, Google me. I'll win. Google me.
Yeah.
Yes, sir.
Hold on. Make sure your mic's good.
Yeah, I got you.
Thank you.
Now,
there we go. Shot. Mic check 1, 2.
They wanted to sabotage us. They can't sabotage us. I'm going to say it again. Congratulations to your Hoosiers.
Thank you.
Number one team in the country, Big Ten champions, number one in the CFP, and probably will have the Heisman. So happy times in Hoosier land.
Boy.
I thought of you. I said, I'm not going to text you. I wanted to publicly congratulate you.
I appreciate it. Back up the Brinks truck. Give them another $100 million. Shout out to the boosters, too.
Shout out to the boosters.
Are you a booster?
Allegedly.
NIL.
Somebody call him.
NIL collector. You got the Indiana merch on.
For sure.
See, you know what I mean? I knew I know what time it was. You subtly did it, but I knew you would. So congratulations. Got the bye week, so we'll see what happens, man. My boys did not get in, but it's okay.
It's okay. First time since 67. 6-7. Once again. Let's make the most of it.
That's a fact. That's a fact. 30 losses in a row to Ohio State, but that is now over. Yo. That's over. That's all over.
Indiana. Shout out to Indiana, man. Yeah, we back. We do have the ticker.
It's there.
Thank you, Mike, for making that happen.
Thank you, my brother.
And thank you to the audience for asking for it. 2 weeks ago, you asked and you shall receive. So 2 weeks ago, it was requested. Said that we was gonna have it by last week, but we got it this week.
Yeah.
So we do listen to feedback. And we do take requests. We do, that's important. Customer service is important. So
indeed,
you ask for it, you
may get it. Yep,
that's a fact, man. The customer's always right, so we appreciate that. That's how you make better performance, right? You listen to your audience. You listen to your audience. A valuable
you have
lesson. We sat down with a prestigious CEO, and he's very, very intuitive about listening to his audience. And so we're listening to ours, man.
So we got a few things going on this week. Blackout, we back Wednesday, 10 o'clock Eastern Standard Time. Tap in. It's going to be a good one. We got a lot to talk about. And then Thursday, we back with a big EYL episode, 6 o'clock. We got Vlad Tenev, CEO, arguably Entrepreneur of the Year.
Probably.
He's in the conversation.
Stock is up 263% for the year. Turned around the ship. Robinhood, CEO of Robinhood. He's arguably the CEO of the year. He
did a great job.
He's in the conversation.
$14 billion net worth.
He is. You know what he said? He said, this is like the fourth time we sat down. Every time I sit down with you guys, a few weeks after, the stock just starts to run. I said, I hope you notice the pattern here.
Thank you.
I hope you notice the pattern.
Preferred chairs, please.
Please.
On the wake up.
Good dude, though. Good dude.
Shout out to Vlad, man. We went to the Robinhood office in New York, and man, just a good dude. Shout out to the whole team. And yeah, this is a lot. We've done a lot of stuff with him now. We interviewed him in Silicon Valley. Went to Miami.
Yep.
He came on Market Mondays. Now we did the EYL episode again, the follow-up EYL episode. And like I said, this is somebody who might be the CEO of the year.
And brought quant-like strategies to retail traders at a time when retail traders were not appreciated. And that's a lesson in that. I'm sure you guys will talk about it. But going to blue oceans that are untapped and giving them professional-like tools to get an edge, and it's worked incredibly for the stock. So
yeah, he took an approach where everybody was kind of discounting, right? He wasn't looking at institution as the only way to broaden your customer base. He looked at the retail investors and said, look, they are sophisticated investors. In fact, I'm going to give them sophisticated tools. When people said that Robinhood was a joke, he said, all right, no, let me give them some tools. He puts out Robinhood Legend. And now you want to talk about sophisticated. I mean, these are above average investors, and they're reaping the benefits of it right now. And he's, he sits in the seat of two different ecosystems, right? Like cryptocurrency, which has helped obviously the stock, but he also sits in the equity side when he's watching companies from a brokerage standpoint. So he's unique, man. They're a really smart dude.
So shout out to that whole episode. Shout out to Aquaman.
Yo,
episode.
Sure. Great episode.
We are not related. Just because, you know what I mean? We're not related. Somebody put a meme with me and I'm like, no, we're not related.
Very viral, a lot of his takes. So check that out if you haven't checked it out. Shout out to my brother Jim Jones.
Yeah.
Shout out to Capo. Outlier.
The Outlier. Outlier, the album is on the way.
The Outlier album.
The LP is on its way.
Calling me a liar? I said Jim.
But you know what I liked about that, man? He was humble enough to just ask in the moment. Because some people would act like they knew what the word was and tried to finesse it. Never be above learning. There's a lot of things that we don't know.
We don't know. Yep. Learn every day.
That was a real moment. It was not edited. That was real. So that makes it dope. And anybody that wants to do hip hop karaoke with me, I'm willing to take any challenge. I'm with it.
So salute to Jim. Yeah.
I'm with all of it.
So check
Good moment in conflict resolution too.
Yeah, that's our guy. That's our guy. That's our guy.
Shout out to your diplomat. No pun intended.
That's our guy. That's our guy.
No, yeah, Jim a good dude.
That's a fact. But yeah, check that out on Artist to Artist. Shout out to Jim Jones. We got some other announcements that we'll be saying later on in the show. Shout out to everybody that took advantage of the deals. We'll talk about that later on as far as what to expect and the onboarding process. But I don't want to hold it up too long. We got a guest. Ian, any announcements?
Yes, we had an amazing Stock Club call yesterday. Replay will be out Wednesday at 9 p.m. Central. If I made you money, please put yes in chat. This week's call will be Sunday again at 9 p.m. Central. Kudos to everybody who joined, like you said, in the deal. And the first day of the trading tournament was absolutely amazing. We'll talk about that a little bit later.
Cool.
But a couple of y'all ran up the leaderboard today. I'm proud of you. And if you haven't joined, you have an opportunity to join later. So let's have an amazing show.
Yeah, shout out to Jason. He hit me up this week. We're going to be sitting down with him on Thursday. Get his brokerage account going, man. Shout out to the whole movement. Good dude, man. I love those stories. I love when kids from the Bronx turn into young men that do some crazy things. Shout out to him. And real quick, we got to give an important birthday shout out to somebody that is super, super valuable to everything here at Earn Your Leisure. Definitely at Earn Your Leisure University. It was Magda's birthday Friday. Happy birthday, Magda.
Happy birthday.
If you've been to InvestFest, if you've been to EYLU, you already know who Magda is. Just an incredible human being outside of everything, but we just want to give you a special happy birthday shout out. Hopefully you had a birthday weekend. I spoke to her earlier. She was a little under the weather, so feel better, Magda. Love is love.
Yeah, happy birthday, belated birthday to my brother Pierre, Red Panda Gang. Love you dearly. One of the most solid brothers I've ever met. I appreciate you. Let's run it up this year. And
all right. Y'all know how this works, man. Let's get to this disclaimer. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and which to rely upon, whether for the purpose of making an investment decision or otherwise. Do the research, share the research. Good research can open the keys to doors that can change your family's trajectory. Shout out to everybody that's doing that and breaking down the walls that will put up, man. We got to build wealth, build our communities, build our brokerage accounts. Let's do it together.
Hot take, better executive year, Tim Cook or Vlad Tenev? Just 1 year.
Let's get into it.
This year?
Who had the best year as far as Tim Cook versus Vlad? I think when you look at Tim Cook, you look at somebody that has weathered the storm, has Apple stock at an all-time high. I think it's up over 25% for the year. One of the most important companies in the world had the new iPhone release, and I think that it went well. Rolled out a few different features, even with the translator thing. We used that when we did a video of that when we were in Africa.
Yeah,
when people were speaking French. So I think Tim Cook has had a stellar year, but I think that Vlad Tenev had a better year because anytime your stock goes up 263%,
you cannot argue with that.
That's crazy. And then as far as the transformational direction that Robinhood is really, positioning themselves to become the real leaders of the new school when it comes to brokerage accounts, doing things non-traditional. Now they're talking about rolling out opportunities for people to invest in private companies.
Yes.
IPO investing. When you talk about prediction markets, sports. He didn't say sports gambling, sports betting. He said sports
predictive markets.
Predictive markets.
Predictive markets. We got language important.
No, but he had a special language for sports. But
waging.
Sports waging.
Sports waging.
Sports waging. So I mean,
language is important.
Shout out to a good legal team too.
The comps team.
Sure.
And then crypto. And then what they've been able to do on the crypto side really revolutionized. A lot of people say like, oh, well, you don't technically own your crypto when you invest in but they just made it easier for a lot of people to get into investing.
Mm-hmm.
And they're extremely popular, especially among young people. And it's not a fad. I think some people thought it might have been a fad because he was saying, even when we interviewed him, the first time we met him, they were in trouble.
Mm-hmm.
Coming off of that whole GameStop situation.
GameStop, yep.
The stock was down bad. And he was like, look, since then the stock is up like 500%.
Mm-hmm.
It's up 263% just this 1 year, but since then it's been up like over 450%.
His demeanor has changed as well. I remember the first time we met him in Palo Alto, it was a totally different experience. It was security everywhere. He was kind of subdued. When you look at him now, very relaxed. And I saw about a piece that was written about him, and he made a conscious effort to be more relaxed, to say, you know what, I'm going after the things I believe in because I trust them and I know that they're right. It's not even about trying to please everyone. It's about, trying to cater to what everybody thinks that they should have. And he's looking at it like, look, I see what they're doing. I know what we're doing, and I know we're right about what we're doing. So if it's between just those two, out of Apple and Robinhood, or are we just talking general?
No, just those two to start.
Just those two. I'll go with Vlad. I'll go with Vlad because of what else is coming, right? Like, so you talked about predictive markets, which has brought in tons of new customers and tons of new revenue. The leader, right? And I talked to him about it inside of the revenue field is still options trading.
Mm-hmm.
And so, that's near and dear to me. And so watching how they've evolved in options trading, watching how they've made Legend more applicable for people who are doing options trading. Like I said, it makes it more sophisticated, but also something that was interesting is the brokerages accounts that are going to be of the future.
Mm-hmm.
Right. So if we look at where the demographic that is on their platform, they skew younger and they continue to skew younger. And whether it was a knock for gamification and now for the predictive markets, he's meeting people exactly where they are, right? So if sports betting is something that he's seeing that a demographic is doing, well, how we do sports wagering and predictive markets, and he actually goes over this in the interview, how do we bring that to our platform where most brokerages are like, hey, we're not going near that. We're not touching that. He's leading and he's setting trends, whereas Tim Cook has, and there's a couple other things that he's at. We always try to discount some of the great things that he's done. He's done a great job as a leader, but they have been slow. Them losing pieces to the puzzle over the past year, we have to take
on the executive management side. You mean
we have to take that into account, right?
Who do you think?
You just can't take leaders. I mean, you can't lose leaders, not replace them, especially at a core moment in the company when we're talking about AI, when we're talking about how they're going to move inside the GPU or TPU, whatever space they're moving. We already seen failures with some of the devices. Obviously, the Vision Pro comes to mind. Yes, they have hit an all-time high. Yes, they have moved in different demographics and geographics throughout the world. Yes, some of the devices, the AirPods, you just brought that up, have done well. But I still don't see the forward innovation. It's still the innovation that's happening here. What's the forward innovation? I haven't seen it yet. So I give the nod to Vlad.
Who do you think? Yeah.
It's Vlad, and it's not even a close comparison for this year. I want to be very clear. This year, 2025, Vlad Tenev is a better CEO than Tim Cook. I think year-to-date, Apple may be up,
27%
versus 263. You can't discount that. The way that they've innovated, what they have on the algorithm side, I know you talked about options, but futures is dear to my heart.
Mm-hmm.
At a time when I didn't think they would move into the futures market so fast. Incredible innovation there. And what they're building on that algorithmic side that is coming out next year, which I'm sure we talked to you guys about. You're able to program your own little quant as a retail trader. That's something that a brokerage would, that's something I dreamed of 10 years ago when I was getting started in futures. And also, he not only did he weather the storm, but going back to listening to the complaints and data from your customer pool, he took every request that most people had on the platform, delivered that and something better, while Tim Cook may have dropped the ball on executive management, product delivery, product design, and losing his AI chief and the AI model. So much so that now Google and Apple have come to an agreement for Apple makes it easier to switch to Google phones, because if I'm giving you a lifeline through through AI with Google helping Apple, now I need some leeway to be able to eat into that market share. So I just think Vlad has done an incredible job this year of taking all criticism. The stock was at $28 in April, and it took off to the upside. So for this year, for sure, he's a better executive.
Yeah, Apple's up 11%. I'm corrected. I was looking at the year to date. How much? Yeah. That's the dollar amount, but they're up 11%. Yeah, I'm with you. There was this quote that was like, And I thought of Apple when I read it. It was like, if you don't craft the future, you'll be the company that's reacting to it.
Absolutely.
And so,
and I would rather have an executive that tries and fails opposed to playing it too safe, because even with inflation, that safe bet of 15% used to be great. Now you really need 22% gain to feel like you're getting something significant out of the market. They're not trying harder. You failed on the car project. And kudos to those that are at HQ. I had a conversation yesterday with somebody who works at Apple. For the first time probably in 15 years, no major executive who wants to be there as a primary option. It's almost like a backup, if you will. 10 years ago, you wouldn't have had that. Apple was the end-all, be-all. It was like technological heaven, damn near. Now it's a pit stop to make it to Meta or Google or a Robinhood or Perplexity. They'd rather be at a startup than be there. That's not good culture-wise.
they're not shaping it. They're reacting.
That's a fact. All right. Well, let's go into the. And then,
no, we're not taking out 2 tech 2 minutes. I'm sorry, Rashad, but
I will say this: when we did see Vlad, the first thing he did, he asked, he was like, "How'd you pull off InvestFest?" That was his question. He wanted to know how he was able to pull off InvestFest.
How do you do it?
Schedule a call. Shout out to the Rabbit Hunt team.
Schedule a consultation.
Schedule a team. Nora, what's up?
Schedule a consultation, and we'll give the blueprint
with preferred shares.
Doesn't hurt. Doesn't hurt. Yeah, but definitely check. There's a segment in there. You know, sometimes you're inside of an interview or you're having dialogue with someone and you have an aha moment. There's like 3 of those when that I had on Friday. I'm like, oh wait, wow, because I know what he was trying to say, but he couldn't really say. But it was like the tea leaves were there. So definitely tap in with your notebooks on this one.
What's the future trading tip of the week?
I think it's an old lesson, but one that's really important, given because of the tournament, right? What your plan is, you have to stick with that for the next 3 years. What happened today? Because some people thought they were immediately going to be the leader on the leaderboard, and shout out to those of you who are in the top 3. And I had a chance to talk to a few people, and a bunch of people were telling me, well, because of the tournament, I changed my plan. I'm like,
oh man.
So you did this all year for the games to start, and now you're changing when you get in, when you get out, how many contracts you trade, and everything that you've been doing for the last year or two. And I think sometimes when the pressure's on the line, and we've all done this, you'll do the analysis, but then when you pull up Schwab or you pull up Robinhood, you're like, well, what if this goes wrong? Let me try something different. And I think it's really important to lock in and just follow the same plan that you've been working with the entire year and not deviate from your original plan that you have designed for you. Whatever this plan is that you have in front of you, marry it. Some of you are too unfaithful in your trading and wonder why you're not getting ahead. Lock in.
Yeah, that's a fact. I had a conversation this week about that exact thing when we talked about emotional investing. Right, or having emotional discipline when investing. I had a few calls about it, and it was like, do you really believe this is going to work? And it was like, yeah, I believe. I'm like, but do you? Like when it doesn't, the trade or the investment ticks down, how do you feel? Right? Do you trust the work that you did up until that point?
Yes.
Whether the trade goes green or goes red in the next week or the next 2 weeks, do you trust what you've done? Most people will deviate and say, I'm out of here. I'm not doing this anymore.
Yeah, shout out to O2 Noob. He says you have to be adaptable. I agree. But you have to front load all the work in case things go wrong. So no different than I told my son this weekend in basketball. If they're pressing, what's your press breaker? If they sagging off you, what's the plan? Whatever the plan is, your adaptability has to be already pre-planned. No matter what. So your adaptability has to be pre-planned.
Have conviction with it.
So, okay. Let's talk about what do you think the biggest investing mistake of the year was?
For me, it was 2 things. Number one, anyone who missed out on that April run, I don't know if you're ever going to have a better opportunity. Like when I go back and look, because that Friday I did a Good Day New York, shout to them. And they were like, which stocks were bad to invest in? I'm like, all the qualities were great buys at that time. For the first time in maybe since COVID, did you have such a chance to almost have a guaranteed win? So I think any capital that you did not deploy in April when we were screaming to buy is probably the biggest mistake of the year.
I have that exact thing in my notes. It said not taking advantage of the downtrends. I started in January though. when people felt, oh my gosh, what is happening? NVIDIA is not real. Here comes DeepSeek. It's not real. The whole AI thing isn't real. And we saw all of these companies drop. That was the first one. Then April got compounded with the quote unquote Liberation Day. And then we had a class, and it was like, it goes back to the original question of like, stick to the plan. Because I remember in April, we had the class, I'm like, look, let's just stick to the plan, right? Let's find some indexes to invest in. Let's find some ETFs to invest in, and let's build from there, right? Those indexes and those ETFs are up 200, 300% right now.
Easily.
Just because it was like, we know what the plan is. Oh, the moment has happened, implement the plan. Let's watch it happen. Those are up 300%. And then you got the companies that were inside those ETFs that were going to lead it, the AMDs of the world, the NVIDIAs of the world, Micron of the world. And so now you got the ETF running and you got the individual equities. Yep. I actually did a leverage ETF. Was the first time I did that in a semiconductors because I believed in the space so much. That's up over 900%. Yep. Sticking to that plan, but taking advantage of opportunities. What do we do in November, right? There was a 5% pullback last month. People were scared. Oh my gosh, this AI thing.
And it's only 5%.
It was a 5% pullback. Another opportunity. Another opportunity. Shout out to somebody in the chat. They said, yeah, XOXO was at $8. It was at $8. Yeah. I bought a $28 call. So imagine what that looks like. Right. So it's about taking advantage of those moments. When you see those moments happening, it's like, oh, you waited. Here it is. Yeah. What are you doing? You got the script. Stick to it.
And the second mistake, if I can give one, for every investor and trader, I think you need to hunt for what the next sector is that is going to rise outside of quantum. Like all of your investing prowess. We had the gentleman from BlackRock come on and he kind of gave you like the 3-tier plan. If you're not spending all of your time figuring out which company is going to boom next in 27, you are going to be sadly mistaken. Because now we're getting into a space. I don't know if we'll ever go back to when value investing is ever needed or popular again. You need to hunt for the next company that will have a meteoric rise, that is sustainable, that will be life-changing to the economy. And also, too, they're going to be a company that is currently dominating their sector now in terms of market share and mind share. So when we think of this chip race, we think of NVIDIA, when we think of smartphone, we think of Apple. You need to search high and low for the next company that is about to break out in 27 or 28 for a long period of time.
Yeah. Fact. Shout out to the chat. Yes, XLU, Spider Ticker, ETF did split 2-1. XLK also split 2-1. So if you had one share, that now turned into 2 shares. If you had 10 shares, now you have 20. And that goes as well for options contracts. If you had 10, now you have 20. So those 2-1 splits, just be mindful. I know it was kind of weird when you open your brokerage account and you had an option and the contracts double, but the money's like you're down more than you ever thought. It's just because the options, they haven't adjusted. The business ads haven't adjusted. Somebody asked, have I ever had a losing trade? Yeah, I've had a losing trade. I think I was on here, I talked about Kava and I talked about where my entry was and where I was going to exit if it got to that point. It got to that point and it's fallen ever since. I've had a losing trade.
Okay, let's talk about Carvana.
Oh, man.
Running the S&P 500 after almost going bankrupt. So is this a real comeback or a sign that the market is getting reckless again?
That's a real comeback, but what will happen as a result? Because Carvana is one of those ones in 2020 that I loved. Then I got criticized for it during the drop, and I was like, hey, you need to look to get back into it like around 41. Here we are at 447. It's going to lead to a lot of other companies saying Carvana dug themselves out of the grave. We can do it too. And those companies will look like the extras in a Michael Jackson Thriller video. Every company is not Carvana because Carvana did it. This is a very unique case. I wish Square would have did this.
So in full context, to put it in perspective, in 2022, Carvana was $4.
Yeah, it got to a low. Yep.
So right now it's $448. So what that represents is a gain of 11,000%.
Yeah.
So it gained 11,000% in 3 years. And like you said, it was actually at death's door.
Yeah.
Mm-hmm. It was on the verge of just complete collapse.
Mm-hmm.
And now it's rallied 11,000% in 3 years. And now is a part of the S&P 500. So, well, why? What was the catalyst for the miraculous turnaround? And is this the greatest turnaround story that we've seen in modern history?
One of the greatest ones, I think, if we're going to go all time or at least our era, Amazon has to be in great consideration because after the .com crash, They were calling for Jeff Bezos's head on a stick, if you will. And the remarkable turnaround that they've had since then is something like out of a movie. So this is very close. I think the company, or the one thing I don't like still is the net margins are too thin for me.
Mm-hmm.
But given the infrastructure, the changes that the executive management has made, like another story similar to Vlad, when you mess up, the executive team is either going to right the ship or they're going to put their hair under the sand and say, hey, we did nothing wrong. The customer's wrong. And they found a way to claw themselves out. And not only that, when the business was falling apart, they were always honest about the numbers and they never lost the trust of Wall Street. That's really important. When an executive is just losing and getting his face kicked in and he's not lying or putting on a story as to why the company's underperforming. And they had a chance to turn it around and they've done an amazing job. Now, I want to be very clear. They are the exception to the rule. So don't think this is going to happen if a stock normally falls this far. I don't think, and maybe too, they got caught up in a little bit of the hype of that COVID era and saw the benefit of it and kind of took their foot off the gas and didn't manage as well as they should have. But I want to be clear, this is an exception to the rule, but they did a great job in turning this business around. And as a result, the stock going up a lot. And also it's a testament to sometimes a price is so low from a technical standpoint and from an investment standpoint that the risk is all the way to the upside. They're like, once they got to 3 and some change, or they fell to 4, if you believed in a company similar to what MicroStrategy is going in now, you have previous levels to where they were. So even if you got in at 3, there was a case for it to get to 156. If United Healthcare has another CEO, they should probably pop another $112 or another $115 to the upside. But you have to have complete belief in this company, and they've done a great job turning this around.
Yeah, it is one of the greatest stories we've seen. I'm with you on the idea of it feeling like it was a COVID stock and it was part of this, hey, everything's running up. The used car market demand, the reason it fell was because of it potentially was almost going to bankruptcy. When you think of it from that standpoint, to be up 11,000%, to be trading over 440, it's pretty remarkable. Yeah. They've changed operations. Obviously, they've settled, some of the debt structure that they had. But is it the market acting reckless? I don't think so. I don't think in this case. I think this is a unique situation. What is concerning is that the used car market is still dependent on people buying, right? If interest rates continue to stay high, what does that look like in the space? When we talked about the average used car price, we saw that number go up. Dramatically. Why has the stock continued to run? Obviously, we talked about some of those things, but inside of it, at its core, they were the first to market in this space, right? So any other competitor inside this space doesn't have that same advantage. Yep. It doesn't have that advantage. What we will see is in the next few years, can it be sustainable? That would be interesting to see, right? Because if we're talking about credit defaults, if we're talking about student loan defaults, if we're talking about used car payment defaults, all those things will have an effect on a company like this. But they've had a hell of a turnaround. Credit issues in the future, we're going to start to see, especially when we're talking about people losing jobs, people defaulting, credit issues will now affect the car industry. We'll see if it's sustainable, but right now it's one of the most miraculous stories we've ever seen.
Is the used car market even going to be a luxury market?
Is it a luxury market?
Is it going to turn into one within 4 or 5 years?
Why would it turn into a luxury market?
In terms of affordability?
In terms of affordability.
What do you mean?
Can the average, I guess you're speaking from the point where can the average person even afford a used car?
Yeah, I don't see any $5,000 or $10,000 used cars.
Yeah, the days of I can buy a
$15,000
or $3,000 used car,
it's over with.
That's done.
With inflation,
you can still buy a cheap used car.
What price range?
$20,000.
$20,000 is a lot of.
$15,000.
It's a lot.
Okay.
$15,000 is a lot of money
For a used car?
Yes, it is, brother. Yeah, bro.
What? Like a college student?
Yeah, $15,000.
You're not. It's not like you're not giving a check for $15,000. $15,000 is like a $150 car payment.
But the average used car is $30,000.
Somebody said in the comment, police auction, but I'm just talking at scale.
At scale, the average used car for the United States is like $29,000 average.
That's cheap.
That's a lot, Rashad.
That's not a lot of money.
Rashad.
What's the car payment? What's the car payment for a $29,000 car? $200?
No.
Probably with given interest, maybe somebody can put it in the chat. But really, probably 475, 550.
No.
Yeah, well, I just try to get a young boy a car.
For $20,000 car, he
no, 30. It was 30,000.
His credit. We said 20.
Well, we're gonna talk about this.
No, I said the average cost is 30,000. I didn't never said 20.
Well, we reported on this. The average payment for
72 months is $300. So $300.
At what interest rate?
72 months.
At the regular interest rate.
Well, that's what I'm saying. Credit comes into that. So, like, a kid got a student loan that he
average. We going by average. 7% interest rate. So,
what about 60 months?
$300 a month is a very affordable amount of money to pay for a car. That's affordable.
Yeah. Somebody put in the chat the average payment is $460. We talked about this a couple of weeks ago.
Yeah. The issue, like I said, I try to do this to a young man in the neighborhood. I try to get him a car. And one of the things was the credit. So obviously his credit wasn't the best. He had like a 650. And so that brought the interest rate up to
which is not the worst credit score.
It's not terrible, but it brought his payment up to like it's $500, right? And then he had to get his own insurance because his mom's like, yo, you got to get your own insurance. Yo, the amount that they're charging these kids for insurance,
crazy, bro.
I'm like, yo, it was an additional like $300 on top of it. So you got the car payment, you got the insurance, which started out as $300 is now going to cost you $800, which is like, damn, a kid in college, if he's going full time and gets a job, like it's going to be tough.
Good credit. It matters.
Let alone the gas you're going to have to put in there. And if it's used, that means it's going to need repairs. Right?
So according to JP Morgan, in a few years, oil will be $30 a barrel. So
do you? Somebody said just go to Carvana. Hello. Right? That's a mistake I made. I bought a used car, right? And I thought, hey, I want this car. I'm gonna get this car. I got the car. I didn't realize the maintenance that it was going to cost me to keep that car. Because one thing I learned about, like, at the time was a BMW, and I'm like, those parts are expensive. It doesn't matter how old the car gets.
It doesn't matter, bro.
The parts stay at the same price and they're expensive.
Oil changes $250. Any service is $700 off top. I don't care what you get.
Be careful, y'all.
Mm-hmm.
Yeah, but I still think that people have cars. People buying cars. It's not a car crisis.
No, I didn't say it was a car crisis.
No, I'm just saying
affordability and price. Yeah, that's what I'm saying.
Affordability of eggs is out of
on your first car.
Everything.
You remember the payment that you had on your first one?
Yeah,
it was under $500. For sure.
No, not really.
I remember it.
How much was it?
It was like $370 something. It was the Infinity.
It was an Infinity.
I remember it.
It was at $470.
It's under $500.
That was 20.
And that was a nice car.
That was 20 years ago.
And that was a nice car.
But that was 20 years ago. It's inflation.
Yeah, exactly. So that's what I'm saying. Like that was a very nice car. We're talking about I'm talking about like a Honda, bro. I try to get him a Honda.
Oh, you can get a Honda right now.
That's what I try to get. That's what that price was.
You can get a Honda.
He was like, yo, it's going to cost me $1,100. I'm like, how did you get to that number?
Mm-hmm.
No.
And then when he broke it down to me, I'm like, all right, well, maybe you just keep the car you have.
No. He got to work on his credit.
Well, that's going to cost money too.
For sure.
You can get a Honda out here.
Mm-hmm.
Needs a Honda Chevy.
Okay.
But to speak to inflation, like 100,000 now puts you in the top 30% in earning potential in the country, and probably 20 or 30 years ago would put you in the top 8 or 9%.
Say that again?
Yeah, because people, it's a nuanced conversation. We'll have this on Blackout. What is a lot of money? That's what it goes down to. Is $500 a lot of money?
Or to pay for a car?
Is it a lot of money?
It's $500. That's relative. No, to me, it's not. No.
To some it is.
To me. But some, I understand that it's not. There was a time where that was a lot of money.
To actually a lot of people, $500 is a lot of money.
There was a time when that was a lot. Yeah. It's a different time.
So it's all relative.
It's all relative.
Inflation. Waiting on this Fed rate.
All right.
Not going to happen.
We're going to talk.
The odds are in our favor.
We're going to talk about the Netflix thing, but I want to wait till our guest comes on.
It's in our favor.
Have that conversation. So when we're talking about Leap, what's a good stock currently on a dip that looks attractive for a Leap or a swing trade?
You want me to go?
Yeah,
you want to go? All right. So I actually called Shadi about this today. And for my EYLU people, y'all know that I've been in Oracle for a while. And we took profits and we've seen Oracle pull back. Here's why. They have a catalyst event. So I always take those things into account. Obviously, they have their earnings coming up on Wednesday. Broadcom also has their earnings on Wednesday. And then we have this Fed decision. And I think I got to put both those things in because I'm talking about catalyst events that can help move uptrend or downtrend for a company. When I look at the metrics and like when we talk about what's your plan, well, number one, has this company moved down from 20 to 30% from their all-time high? Absolutely. This thing has went up, shot up to 343, and we caught that uptrend. We took some profit, and now it's sitting down here at 220. So it definitely pulled back over 20 to 30%, so at 37%. Well, inside that, do I look at the option calls and see if they depreciated? This one I can look and see already that this one has, the leaps have gone down by at least 50 to 60%. So those are two metrics that I do like. Now I look at the fundamentals for it. Is it strong?